See how many people show have any sound. Now you have sound. Happy Saturday, everyone. I'm glad I could just take a few minutes out. I was going to do this yesterday on short notice, and it probably worked out better. So we'll see how many show up. Let the room fill up a little bit. Once the room fills up, I'm kind of changing at least how I think I'm going to approach this session today. Really going to be casual with just hanging out, and that's the plan, is hanging out here and talking some TA, talking some technical analysis, WaveTech, some trending concepts that I talk a lot about the show, and really focus in on that. So this is exactly what's going on here. I'm just looking at some of the chatter. If you have any questions about the stuff I'm showing on the channel concerning the indicators and stuff like that, maybe put them in there, and then I'll kind of see what is out there. So at least we're all spending the time, and you folks are generally getting some of the content that you want. But seriously, I wish we could, I like hanging out. We have a absolutely great community. I know it's Saturday. It's a holiday weekend for us, everybody. It was kind of interesting. So while we're letting the room fill up a little bit, yesterday's news with the markets being closed was pretty much nothing from that standpoint. We could go over, matter of fact, let me go over here just while we're getting in here. I don't have the green screen on, so you get my bookshelf in the background, but we did see a little bit of a pop on the employment. So I'll talk markets for a few minutes here, and then as we get maybe we get 100 people or so, we'll get into some things and set this up. Like I said, this is casual. It's a hangout. Always everything's kind of formulated, trying to slam dunk everything, get in, get out. Most of the times during the evening, I haven't eaten yet, so I do the stream every night. Then I go and home and have dinner for the day. So, but yeah, I would. Listen. So I see Vito. You're talking about a subject everybody's talking about, and we'll just I'll touch on it. I'm working on the scenario around the BRICS and its significance. I can tell you I spent time talking to Dr. Baker. On Thursday, I talked to Dr. Namur, who's at City College of London, professor, runs the finance department there. We talked about it, talked to a couple other folks that I have high regard for, that I was interested in their opinion on this whole BRICS situation. And I'll definitely talk about that. Yeah, I did see Trader SLA. I did see your email, by the way. And anyway, I just might mention, if anybody's in Singapore, let me know. That would be interesting to know. As you know, not this coming week, but the following week, I'll be out of town for an entire week. I'll be gone. I don't think I get back to the 22nd. So just be prepared for that. But as far as the BRICS go, I'll make a comment here. I will talk about it more in tomorrow night's stream in a more formal environment. And I would just tell you that I believe there's something there. I saw a really interesting map. I may bring that up tomorrow night, showing how China's influence in the world versus the U.S. go back 20 years, and all of a sudden the world map is changing substantially. The issue is it's really getting difficult. And I don't want to go too deep in this, but just while we're getting a room, hopefully we'll get up to about 100 people on here. Just I'm fine with that. A lot of folks will watch the replay, but I just before we get started on the WaveTech indicators and trends and all that stuff, I just think that it's going to be very difficult. Those of you in Europe, you know what it took to put the euro together. It took a long time, over a decade, I think, or around a decade. And if maybe there's an effort to put a new currency together, a basket, I'm not sure that the Chinese are the ones that you want to hang out with. I think there's going to be a lot of resistance to that, with the exception of some of the key players in there. And, I can't see, I'll just say it out, I'll say the quiet part out loud. I don't see that China and India actually like each other that much. In fact, they've had hand-to-hand combat on borders, right? So I'm not sure they're that big of friends. I just think that the current U.S. administration is alienated the Western world from everybody. And I'm not going to go too deep, because some of the conversation I have, I get pretty deep. This deserves a stream in itself, actually. And maybe that will happen. But I do think there are elements that we'll start to see. There'll be transactions that are going on that are likely to be transacted in other things in U.S. dollars. There's just a lot of stuff that's going on everywhere from UAE to Saudi. The whole Middle East is involved in this as well, including Iran, and the whole situation is very bifurcated. And I will try to put some really solid thoughts on that. I probably shouldn't have went too far down this trail, but I do think there's something happening there that will be material, but at the moment I don't think it is. Although I will cover the Dow on tomorrow night's stream. So we're up at 81, so we'll get in here pretty quick and go through some stuff. But I just think that the realities of this BRICS situation, there are some realities, but I don't think the world switches tomorrow. But you have to look at the how brutal the U.S. is with the dollar. I mean, the whole sanctions and all of that stuff that they put on Russia has caused the world to bifurcate. And maybe it's a natural event. I don't know. It's pretty scary, because, like I said the other day, you have around 3.3 billion people population in the BRICS environment versus the Western world, which I think you're kind of stretch to get to 1 billion. So, I mean, from pure population and all that, and consumerism and all the potential output and consumption that can be out of the bricks versus the others, it's a big deal. So for now, I'll leave that alone. I'll try to put some really solid thoughts for the stream tomorrow night, because I know that's just front and center right now. And so anyway, so let's go ahead and yeah, I mean, there's a whole conversation. I see some things that are coming up here, and it's a deep conversation to have. Like I said, I spent time, and I've got a couple more phone calls, people I want to talk to that I respect, just to see what their perspective is on this. And I have mine, of course. And so, like I said, Sunday night I will delve into this whole BRICS thing. So let's talk about what we're here for. Okay, we're getting around 91 people. So thank you for taking some time out on Saturday. So the best thing I'm going to try to do here is I get a lot of questions, emails, all kinds of stuff on the indicators. I appreciate everybody that has bought them, and I won't go into a lot of depth here, but I will mention there is another suite that is going to be released, but I don't think it. I am going to be surprised if it's not into June by the time that happens. So I broke a cardinal rule by showing some of the some stuff the other day, which is one of my developers, software developers, used to say, never sell anything or reveal anything that's not available today. And I did that. So I apologize. So hang in there. There's some pretty cool stuff. If you already bought the indicators, there'll be kind of just a slight add-on fee to get the next set. So we've looked at, even depending on what I decide to do on development, and part of my trip is going to also bring that into perspective as well. When I'm out of town the week of the 17th, will also help me to bring some things in there. We've talked about maybe having like a annual subscription or something that you pay once, but you get all the new releases. But that puts us into the crosshairs, meaning that we have to make more releases. So I'm going to come up and see what we come up with. I think a small fee once you bought the primary is going to be the right way. It takes time and money and lots of stuff to develop some of these things. I've got a lot of concepts that I'm working on getting into that I want to get out to the community. The whole point, by the way, just speaking of the indicators, is the whole point of putting them out was to get start to get some of this legacy stuff out. I just wanted people to have them. I guess you have them as long as Tradingview exists. I mean, they've got 30 million users now. I think they've increased 10 million users over the last year and a half or so. They're 200 or 300 million visits per month. So it's a very good platform. Who knows when things come and go, but as long as that's around, you'll have these things. And my goal was to get my work out there and that I exposed. And all of you folks that have shown up here to watch my channel and all that, really appreciate it. Quite a few of you bought the indicators. So I thought, hey, it's Saturday morning. I'm going to be out of town. So let's go ahead and chat with some of this stuff. So we spent a few minutes. So we'll probably end up hanging out for a couple hours. I want to get this together, but let's do this. If you have specific questions about the indicators, why don't you put them in a timeline right now, and I will go through and pick out some of these and just see, and then I'll just go into the presentation that I had planned on, and I've got I started a Substack back in January, and I did write one article. I have another article ready to go out. The unfortunate part, I thought I was going to be able to maintain that environment. I'm hoping to fix that environment as well. We've got a number of things that we're working on that in theory are going to make my life easier to get content out to you folks and all that. I have to tell you, people that run reasonably large environments, I have a high regard for a lot of folks that are capable of distributing a lot of information, whether it's via Twitter and Substack and all that. It's a very big job, and we're a small group. My team is fairly small, and I'm trying to fix that right now. So that's a number of things that we're doing. But just to ask just ask a few questions here. I'm just going to chat while you guys are putting this up. I'll review some of the questions, and then I'll go into a bit of a presentation. So let's talk just while that's coming up, and then I'll look at some of your stuff here. But the main things that I talk a lot about is trending. My entire livelihood has been affected going back to roughly 1983. I met an individual then that we started working on markets. We read Bob Prechter's first book, Elliott Wave, by Prechter Frost. That book, I've never looked at another Elliott Wave book since. It laid out all the postulates and all the key things that you need to know, the most of the theory. I did also, that's not true. I did study R.N. Elliott's original works. Those are the two books, if you're going to read Elliott Wave, I would do. I would be highly cautious of, there's a lot of really bad wave counts going out in the world. If you had to solve many of the so-called wave counts that you see, everybody counts 1, 2, 3, 4, 5, all that kind of stuff. The actual theory that is not being applied. I can, for the most part, some of the stuff I've seen out there is pretty sloppy. Doesn't meet theory at all. So if you're going to be a purist in Elliott Wave, you're going to be very disappointed in a lot of the stuff that you see out there. And I've even seen channels that have dedicated their entire existence to Elliott that are really doing some really bad things. And there's stuff in TradingView that they put up to address this. We'll call it New Thought. And I'm not saying that some of the New Thought isn't bad, but I'm a purist, and and I don't do the wave counts anymore. And I really have, just so you know, I'm going to talk a little bit about WaveTech, and everybody, maybe you don't know what WaveTech is. It's not just a name. It was something that was developed. So I won't go into history today. I'm going to go, I did write that up. If you go to my Substack, it's Kendall Report at Substack at I think it's Kendall Report. I'll look it up and confirm that. We'll put the links in the description on the replay. So we'll put some stuff out there that you can go through. But let's see what you get. Let me see here. Let's go so you guys don't have to watch me looking at my screen. I'll just go to a full screen here, which we had some music to play here. Let me. I have an idea, and so yeah, to give me just a couple minutes to set this up, and then we're hanging out. I was hoping to get at least 100 people here, and we got that. Couple more here, folks. At least we have some of you Smurfs hanging around. Thanks for showing up. Looks like Key, at least. Yeah, Key, you're the lone moderator today, so hopefully the evil Levi doesn't show up. Yeah, just real quick, David AMS, I agree. That's kind of my view as well, by the way. Yeah. Thanks, Eric. I want to talk about the market grid too, man. We could just spend like 5 hours. We could do it. We could do a Joe Rogan thing here today easily. Let's just take a look. Yeah, Shu, hope all's well over there. They're making me nervous. I don't know how you folks feel. Obviously, probably don't want to say much, but anyway. Okay, I got a feel for what you guys are going for. Yeah, yeah, Tavern Tech. I'm not. I you're about to be banned. I'm not going to have people recreating this stuff on this channel. Not offering. You can have them. You can do that stuff. It's a free world, but please don't be hacking my channel like this. I know you're a good participant, so I just do me a favor. Send me an email to info@Kendall Report. Let's talk, at least email or otherwise. I don't want people promoting stuff on here. So I hope you understand that. Okay, so let's get into it. Yeah, David Nesbitt, just real quick. We are working on a package, a bundle for everything, and it's going to be discounted quite a bit. So hang in there. I'm hoping to get this done before I leave next Friday. That's part of my effort this weekend. And we're going to have a package out that includes indicators and WaveTech. And it's an annual purchase, but it's much less than just getting. It's about the same as getting WaveTech, but you get everything basically is what I'll put out there. And we're going to do that. All right, bear with me 1 second, folks. All right. So let's get in. There's a couple things I want to talk about here real quick before we get into this stuff. So let me come back on. Yeah, let me just come back on. So It's a shame because I know this Tavern Tech guy was a pretty good participant on the channel, but you don't have the code. It's a copycat, and stick with me here, folks. So let's just talk a little bit, and this will set you up, and then we'll get into actually looking at indicators. And there was not a really good update when we updated the PPMs and we put the AR in there, the auto regression. That was a big event, and I've given this credibility to a couple of people, both in Germany, that helped me work with that. I'm glad to work with people. That you just have to approach me in the right way, and I'm grateful for Alexander and Alex and for what they did. So if you're watching, thank you again. But there's just been the AR has really brought in some insight here. And so let's talk just WaveTech for a minute. So what WaveTech is and what we developed it for is we were doing Elliott Wave back in the day. And I'll show you a couple of elements here. Is the reason why I use simple moving averages. I know I'm an old guy. Okay, I'm an old school guy. But the reason why we use simple averages, we didn't go to exponential and any kind of weighted type situation, is simple averages helped, the ones that we chose, helped us to define the patterns that we understood. And this is something to make this kind of a quick class here. Let me mark the time that we're at here at at 26 in. I just want to mark this time because this would be something to focus in on. But what we were doing back in the day is we started studying Elliott Wave. We started looking at the patterns. If you go into look at it at wave, how waves are interact and their ratios and their lengths and time and all that stuff. We were doing all this. We had a clear sheet at the time. We didn't have, you have to realize back in, this was circa 1982, early 83 when we started this effort. And at the time, I used a platform called CompuTrack. It was the only retail at the time. I think Metastock came in a few years later, but at the time, Metastock or CompuTrack was the only charting program. And it was interesting because they let you build your own indicators on that platform. So that's really where the PPMs come from. But basically, we started like everybody. We had a 21-day moving average. It was a Fibonacci number, and we put it on a chart, and we looked at trends when it was above and below and all that stuff. But then we got intrigued by what was going on there. But we thought, man, it'd be nice to have a faster average that defined when the markets were accelerating more, where the primary trend was, and then maybe a longer term where the corrective waves would happen, and typically like a wave 4, and before we set up a wave 5 type pattern within the Elliott context. And the interesting that came out of that is we kept playing with all kinds of moving averages. We spent seriously a better part of a year. I was in San Francisco Bay Area at the time, so markets closed at 1. Ultimately, I went over to Bill's office. We set up actually a network, if you can imagine having a network. And this is probably 1984. IBM AT machines on a network. We built dual systems, but I would go over to Bill's office and we would hang out there and study the markets for between 3 and 4 hours, pretty much every day from 1 to 5. I would go there, and that's where I spent my afternoons. And what we were looking for, we were all using moving averages. So we were going, why did this time did it penetrate and go down and keep going down, and why this time it didn't and it bounced off. So we started. This is where the PPMs came from. So I'm going to start here just real quick. This won't be a big, deep history, but it's important to understand, because what we were trying to do is figure out if there were probabilities of where markets would happen. I may take just a brief break. Unfortunately, I thought I was going to be able to get over to the office about an hour earlier than I was, but I had I had to take a phone call from a friend of mine who's ill and spend some time with them this morning. So that was unexpected, but kind of delayed me. But I do have, it's on another computer. I'm going to log in from here and bring it down just so that you folks can see this probability map. And I'll probably do that here in a minute after I set this up. But here was the goal. And what we wanted to figure out is what the probabilities, was there anything we could find by looking at the moving average itself? So instead of doing, a daily close, running whatever, relative strength, rate of change, whatever was out there at the time, Larry Williams and Jake Bernstein and those guys were around in the early days. There was a couple others that were creating indicators. None of them were very good by the most part, but they were like a mill. I bet Larry Williams and Jake have probably built thousands of indicators. They're probably still building indicators. I have another friend that is an indicator. It's like a new indicator of the week. Well, I did something different. We were looking for a different answer. We were looking for an answer that made it a tradable situation. You have to understand these PPMs were developed, like I said, in 1983, 84, and they have been in my life forever. And this has touched many, many large institutions, people that I work for. I worked in a trading floor, hedge funds, all kinds of stuff. These have been the main influence for me to make analysis of the markets since then. So sometimes you get lucky in life and you figure out a couple of things that work, and if you're willing to stick with it, you'd be surprised where it takes you. There were plenty of reasons as technology expanded all kinds of stuff to go down a road. What I did with my knowledge of all the PPMs as I started building trading models, and I guess it was around 1986, 87, we started formulating rules. And then after that, in 1992, I brought in the models that you see that I talk about every day, 1, 2, 3, 2, were actually finalized in 1992 and were a slight update around 1995. I said 82, 1992, and then 1995 is when they were updated. So instead of trying to find more indicators, I found out I started building trading models, which to take all of the emotion out of the markets. There was still emotion. I saw somebody ask, one of the questions out there is how can I get the signals on the screen? You can't. Unfortunately, we can't program them. And even TradeStation, we use an outside module to calculate we call another outside file that does the calculations for the models. There's quite a few different things. Of course, we have WaveTech and Portfolio Expert, and those two platforms run about something around 10.2 million rules every night on the entire database. If you look at every symbol that's in there, it's quite expansive. So we've been running that environment for almost 20, what year is this? 23, yeah, we're better part of 20, 25 years. So, but that's where I went with this. So I'm going to break down what I've done by giving you guys the indicators is really gave you some of the components of the thought process that went into the modeling. And I'm kind of bringing it into some perspective so at least you can use that. So what I'm hoping to do here today on the screen, when I bring up the screen, I had an hourly chart. We'll get into daily, weekly trends and go through this, but I just want to set this up so that you understand what we were trying to do. So in the end, also, if you go back to what I said a minute ago, we were in the Elliott wave, and the Elliott wave has 3 primary sequences. We get 3 primary moving averages, and I'll talk to that. I'll bring that up. I think I'll go through kind of some WaveTech high level basic rules and understanding of trends. Then we'll dig into the PPMs, and then we'll talk about from there we'll go in and talk about the AR, the auto regression stuff, and where that leads us. And I know on the screen when you see this, I have the new moving averages that have AR built in, that are using the AR from the PPMs to generate projected values. And that's a new thing. It's still in testing and validation mode. I'm still going through quite a few elements there. There's a potential issue that I ran into the other day, so I'm trying to put it together right now. But all this stuff will come out, because like I said, my goal here is to get my legacy stuff out there. And you folks remember Bob Kindle, Beyond Bob Kindle. This is really legacy type stuff that I'm doing. I've been fortunate enough. I have been involved in managing and trading a lot of money over my career, and I think that what you'll find from hanging out with me, and one of these days, I'm hoping I can just get in front of a camera and we can get this all jotted down and make a true master class that's very focused. And I know today we just started off by hanging out. We're still doing that, but so let's start to get into that. But I wanted you to have that understanding what we're trying to do, and why we use the simple averages were really just to define where the patterns were likely to go, and they helped us address the trend. I guess let's go over and just look at some charts, and I'll start to bring in the things I just talked about so you understand that at the next level. So let's start with a daily chart, S&P, and just start to break some of this stuff down. Now, like I said, I've got on the screen right now, I've got the PPMs down below it, PPM 1, 2, 3, and then down at the bottom is PPM 200. And so we've got on the screen here, we've got the 10, 21, 40, and 200 period moving averages. So the 10 is white. All the indicators are color-coded to the same color as the moving average that it's tracking. So I am going to attempt something here real quick, okay? On my other monitor before I get in this, because I do want to bring up this I want to bring up this other page here. And I know it's on my office computer at home, so bear with me. I'm bringing that up on screen, and I'll bring this over to talk to you about this. But the PPMs are so useful in understanding trends, and we'll even touch in on we'll touch in on some market grid stuff too, because that's such an intricate part of what I'm doing every day. Of course, my other computer's logged off, so I've got to log in. I should have this up any second, so bear with me. We should be able to flow pretty good. Okay. Couple more clicks. Sorry, folks. This was part of the plan to have this already set up for you. And the good news is I've got it. So awesome. So all right. So let's get into this. I'm sorry that didn't took longer than I thought. But a couple of things here, and you can see right now this. If you've been watching the channel for a while, you know I've been talking about how the PPMs are starting to turn up. Everybody's telling me how the market is going to collapse. This is during all the banking crud right here. And what was happening during that time is the markets weren't telling a story that everybody was listening to. And so the result of this was really that we are setting up this bottoming pattern. How far it goes, we don't know yet, but there's a number of things happening. And I would just tell you, flashing over for just a second here, if we look at the, I think I'm going to have to log in again. So we are at 61% bullish right now. So we go back to this chart. So what I was seeing going back to October as we started getting traction on our intermediate database, we're now at basically 62%. I've talked to you folks about that. The trends, you can see the projected trends on these moving averages, what the angles. So these are like trend lines. And the reason why I would rather have, I'm going to bring this other chart over here real quick. I'll bring that chart back up here in a second. I'm sorry, and now I have two computers running on one screen, but let's just put ES back here, and I'll use this screen. So we'll go to the daily where we just were. So what's being projected here, this will be interesting. I'm running my home office computer, but that's okay. What's being projected here, and in fact, I am going to apologize. Like that's not the setup I need here. Here we go. I will get you there. I apologize. I'm just trying to get to this primary computer here where we just were. Here we go. Now this isn't even it. Oh boy. Hang on a second. I am so sorry. I'm going to get all this stuff out of my way. There we go. We're back where we were. I am so sorry. End up with two different computers, different setups. So here's where I'm very sorry. Anyway, so what we're looking at here is this angle of attack, and I'll go through what this means. This is future. This is the future of this angle. This is based on the on here. This is just so we can see what it looks like. But I talk a lot of times about the PPMs are going to are maintaining trend mode. So you can see this is around 0.31. The projection is that it's still going to be rising during this period of time. So this is what it looks like physically on the moving average on this projection, right? And then you see a little bend in it. That's when it starts to come down. But even here, while this PPM, if you can see my cursor here, this is still a positive value on the PPM, so it's still rising. And it's easy to make the mistake, and I'll try to set up some of this stuff, is because these indicators are moving down, that there is some projection or the market's going to roll over. There are times when that's indicated, so I'm going to try to set up looking at the trend. As we're seeing right now, this is a trend that is probably going to continue onward. and we could go to multi-variant levels. But these indicators are telling us that if you come down here to PPM2, it's at 0.26. It's going to rise a little bit more, but even when it starts to flatten out, if these projections are right, usually about 3 bars in the future is what you can count on. It's pretty good at projecting these numbers. But you're looking here at the projection of these indicators, they're still in trend mode, going out 5, 6, 7 days from now. So that 10-period moving average at 0.34, and I'm going to bring in the other chart now, because I want to talk about the angle of attack here. Okay. Yeah, so the fact that they're looking like they're going to roll over, they're not rolling over. They're just losing their upward momentum. So let me get to my other computer here, and let me get everything up that I need to get up there for you. Okay, so let's talk about this. If I can get it over on the screen again, we'll try this. I got to be careful because this is another computer with a whole bunch of stuff open on it. It's a Pandora's box. So there's a couple things that happen here, and I'm going to attempt to make this a little smaller so maybe we can have the view of the other chart on there as well. Yeah, so let's get, this will be a little bit better here. So so I'll go, actually now it makes this too little. Okay, so here's a couple lines I want you to pay attention to. This green line, this is a typical path of a PPM where it accelerates up. The values on the left-hand side here of this is actually the percent probability of the market dropping below its that moving average value on that PPM. So as the PPM value increases, the probabilities go down, or otherwise you can look at it, you could invert this and say there's a 90% probability when it gets up here that it's going to hold that moving average. But this just tells you this is a probability of failure of it holding the moving average. Then it goes through a cycle where it starts to roll over. This is what you're seeing here. This is a typical terminal value where you get up to usually around 0.50 is where this curve comes in. There's several curves that can emerge, but I just want to start with what I call the terminal value. So we've basically are hitting terminal value on these averages right now. So this is about as steep as they get in a normal trend. Okay, normal trend being 0.25 plus and probably under 0.75. You don't get into a whole integer. You're not going to get to a 1 point something. That's when you get, I'll cover that in a minute. But this is a pretty typical scenario here that we're seeing, is that these angles are very typical. And there's another thing I will say, not only they are typical, but they're sustainable. So these type of trends go on. These are the ones that you get frustrated, like, man, this thing should roll over. It hit this price target, it's still going, hit this price target, still going. It just continues to roll on. And these can maintain. The other thing that can happen, which I didn't draw in, is you can drop down into this 0.25 range again, and then it turns back up. It reaccelerates. So, but these are just to show some paths of how things go from there. So let's talk about the red line here, and you'll see this red scale. Let me draw in some things just to make sure that we're all focused on the same stuff. Okay. So what we're looking at here is is this line right here. I'll draw in. I'll just draw over this thing here. But this line here and this scaling right here is the values that we're looking at. So when we get into that whole number, if this continued and it accelerated again and we got to a 1 point something, then this is typically would suggest that there's going to be an extension of this trend over here that we're looking at, right? So this trend here is going to extend much further. Once we get above that 1.0, then the probabilities start to stack up that not only is it going to stay above a moving average, but it's actually the pattern itself or the market's going to extend further than you thought it would at that from the previous analysis, right? So we started off here just taking a look at this and drawing this in. I'll make it a fat line. Is when this curve was unfolding here, it looked like that's what we're going to get, but in this case, it actually extended higher, which would put us into this extended value. So once it got over, this is 0.50. Once it gets over 0.7, it's going to start, that's roughly, draw this in, that's roughly about right here. This is where all of a sudden we go to 0.1 and it's extending. And so the pattern is also extending. So now if we brought this over, let me get rid of all this stuff, see if I can pull this off without getting into a bunch of junk here. So let me pull that off screen here. So what would happen then if we make this a little smaller, we could start to look at a pattern. If this is not there, we're at 0.34, but if this was going to be an extended, then as we go up this trail, we might see where we're going to challenge some of these levels here. So I'm going to try to put this together the best I can, and so that you understand this, is that this here is possibly basically a 1-2 pattern, and then the next thing that's going to happen is you're going to get this extension. And if you recall, the potential for this rally when we start, if we were doing a full analysis of what's going with the S&P, which I'll probably do tomorrow night, is that there's at least a 42 handle, maybe a 44, or even a 46 handle. I don't, if you look at the DAX right now, the DAX is printing all-time new highs, right? So there's a bunch of stuff going on in the world. Not that these things can't happen in spite of all the craziness that we see around us. And that's why I always try to preach that you want to make sure that you're not, how's the best way to put it, you're not listening to that noise. Because if you listen to that bank crisis, you got crazy short and you lost money. I did a video 6 weeks ago or whenever it was now, why the shorts are going to lose. And this was before they even threw the whole banking crisis and the end of the world at us. That did nothing because it really wasn't material. It was noise. There were just a few banks that were being affected. And not that there aren't a lot of banks that have weird ratios and stuff, but they always have weird ratios. If that's what you do for a living, you're always crying the sky is falling. But this point, what I'm saying here is if we got an extension, if we come back to this, I have to close this stuff out so I can move stuff around the screen. So bear with me. So if we bring back the probability map, if we're going to get that kind of pattern I just drew on, we're probably going to get this extension. We're going to get this extended wave here is going to start to extend. So there's a warning point. At some point, we get above 0.75 to the 1 point something. The final scale is on the orange. So I'll draw that in so I can tie together the primary 3 events that can happen here. And I'll just put this color here. But now we get into this pattern here where we're seeing the parabolic curve. And when you get into these crazy markets, now this scale over here is what we're talking about. and you'll see they get into, especially when you're looking at monthly, weekly, monthly charts. All of a sudden, you not only are you getting into one something, you're getting into twos and threes and whole numbers. I've seen them probably as high as 7, and so that's when you get these parabolic curves, and the parabolic curves get completely nuts, because when you get into there, what happens is the moving averages aren't even part of the pattern anymore. It's just that you've risen in this parabolic level, and now you have to, from the standpoint of trying to figure out how to deal with that kind of screaming trend, you have to start doing the opposite. Let's say you recognize this on the parabolic on a weekly chart. Now you have to start looking at daily or hourly to try to figure out where you may want to scale back or add stops if you were fortunate enough to ride one of these crazy rides. I'm sure all of us, most of us, have been lucky enough to get on a couple of these bullet trains, and when they leave the station, they go very quickly, and it's a lot of fun. And probably I've said this many times in the past. Let me clean all this stuff out. What I've said this many times in the past is that you'll get into these points in time where you're literally looking at these parabolic curves, and you see it. And when you start to get really giddy and excited about the position, old buddy of mine Artie Blostein used to always say on the old days on the option exchange, he goes, if you're feeling really good or you're celebrating the train, you need to be celebrating like SELL break. So sell something, because you got to trick the market gods that you're getting out. And at some stage, I guess, like I said, we could spend days and days, and we could spend hours on this stuff. And I think that that for the most part, when you get into some of these trades, I always feel lucky enough if I look at a chart right now and I think, hey, this chart is going to go from here to there, and it goes from here to there. Those are blessings, because you should know that you're predicting the future, which everybody is going to tell you is impossible. I spend all my days and years and decades doing just that. In fact, to trade, you have to do that. And the fundamental guys will claim that they don't do that, but it's BS, because what are they doing? Is they're guessing at what the earnings are going to be and extrapolating out earnings and other metrics to a price. So they're doing the same thing. They're just full. They're just full of it, because they're trying. Somehow they're more sophisticated, because they're guessing what the earnings are going to be, and you're guessing what a chart pattern is going to tell you. In the end, it's all the same, in my opinion. I think that the chart analysis is much more accurate than any of these fundamental analysis. Some of these guys get lucky and get okay, but it's basically that. Yeah, so I'm just looking at so really good question, folks. Man, I'd love to just do this for 5 hours. Maybe some of you would too. I unfortunately have. This is I decided to take this time out, because I'm not going to be around following week. So that's going to make so there'll be a void. There'll be a Bob void coming up. So decided to put some of this out and talk about this. So we'll go for a while yet, but because it's slow starting, I put a lot of things in here. But back to this chart and understanding the trends is, if the basic numbers here, you jot these down, and they're, like I said, I do have a secondary article. It's been almost done for 6 weeks. If I could find some time, maybe, actually this is a really good time, maybe when I'm on an airplane for a day, I will, a better part of a day, I will maybe have some time. That's actually a really good thing. I can finish that article. That would be amazing, actually. So That might be a really good use of my time. So maybe I'll get that second article out. But the basis of everything here is when these moving, what a trend to me is when you have cash flow flowing in. To me, I look at the flow of the market based on the moving averages and looking at the probabilities of them continuing. So the fact that we hit a 0.25 level doesn't mean it will continue. What it means is that we at least, the 0.25 level is the confirmation point at which you know you're now in a trend. So there's things that are going to happen after that or have to happen like that. Like the other day we talked about the 3-day trade, right? I think it got stopped out, possibly, it got stopped out. If not Friday morning, you should have had it out, or I believe it was stopped out on basically, it was pretty much a breaking even, a small profit, depending on how well you put that on. But when you get into these trends, what we know right now, what we knew going back a while ago, let me just see where this was, roughly right here on the 30th, that was the beginning of the trend that we saw on the 30th. So 30th, we went above 0.25. That's a confirmed trend. Expect more of the same. Expect that angle of attack to continue. Expect the market to climb along that line. So every night when I'm doing my daily analysis, that's all I'm looking at. What's the probabilities? Is the market likely to stay above that? I told you folks the other day, if you got down to the 10-period moving average, that would be a place to get to, would be a good place. I'm looking at the, on the 6th, see, it was 40.81. And if we go up to the low on the 6th was actually 40.96. So we didn't quite make it down there on that. This is daily, yeah. So we didn't quite make it to there, but this angle is going to continue, and that 10-period moving average will continue to be a play. As you can see, going off the next several days, there's still a great angle there. The trend is still involved, and you're likely to stay above that 10-period moving average. So once we get to, okay, let's talk about the trend. So I was drawing in this massive trend earlier, and I'm going to redraw this in because I want you folks to have this perspective. Let me get off screen here. And let's draw this in one more time because I'm trying to tie down this pattern. So there's a couple of big patterns. This is the October lows here, right? So this color is a little easier. I'll make it a little fatter for this. So this October lows, and then we got this little pattern here. And so you got a couple of patterns to pick from. You've got this, and then this low here, which will give you some potential projections up here, okay? I'm going to pull this stuff off, and then you have something even bigger is, let's just go here, and then you got a bigger trend, and where you're going to see that, I wish I could manipulate the screen. I have to keep taking this thing on and off. If we go over to the weekly, this is where we start to see this trend come out. This is what I was drawing here. Is you get this kind of a 1 ABC 2, and we got a potential 3-wave coming. And we could do some analysis here. We do have some Fibonacci targets up here. 42.59, 44.19, here's 45.18. That's these numbers right here. Let me just see if I can bring up our tool again and draw this in. Used to have an old tool that had a magnifier. Love to have that tool right now, but we will do this. So So we have this pattern here. Right here, we've got this, and then inside of that, we have this larger pattern, which is what I was drawing in on the daily and coming up. These values over here, I think, are still valid. And whether we can get up there or not, but we could challenge the all-time high out of this pattern very easily. I showed you that our database is up to 62% long. I didn't show you the probabilities off of forward-looking probabilities off the database, but I can tell you that there's at least a minimum of 80 to 100 days forward where this trading days, by the way, that this is going to continue. So that puts us in 4 months out, right? So where are we at? We're August. This puts us into that Q3 level that I've been talking about, where we finally get maybe a minor top of some sort coming into Q3. And but the bottom line is that these patterns are all intact. Right now, this is interesting. We do not have a strong weekly patterns developing yet on the PPM. So there's so much to try to put together, and hopefully I'm not confusing anyone, is that when we start to go to the next level, we go to weekly trends here. Now we have to look at some other things here. I am going to take off the Fibonacci targets here for a second. And when you start to look at this pattern here, I mean, I bet you could go out, if there was a way to get a number, you could go out through all the social media, Twitter, all this stuff. You'd be hard pressed not trying to find somebody that tells you there's a major recession coming, and maybe you believe this. That's okay. That's what makes a market, and that we'll see 3,000, 2,800 before we'll see, 4,000, 4,200. Very few people are buying into what I'm talking about here. But I'm just telling you, based on a number of factors that I have unique to me, is that I run my trading models on basically 16,000 symbols, and I know how many trends that are being detected and how many trends are in place, hoping to get some values at some point when we have messages that come out of our models that tell you what trend phase they're in. So it would be awesome to know what trend phase all these how many were in certain trend phases, which are accelerating trends. But this pattern here, I'm sure eventually maybe there's somebody. I don't buy in. I don't do a lot of the classic patterns, head and shoulders, wedges, all that. I don't do that. I don't like. That's why I use moving averages versus trend lines. I don't like anything that is subjective to my drawing in. So, but if we look at these PPMs here right now, PPM 1 is still negative. We're trading above the 10-period moving average. PPM 2 is 0.91. PPM 3 is 0.15. The 200, the angle of attack, you can see the 200's got a pretty good angle. That was pretty much where the lows came in off of this 200-week moving average. And there's still an upward slope here. And I've been promoting, probably going back several months, that we're going to stay in this wide trading range. 42 could end up to be the top, 44 could be the top, and we just continue to waffle through. Won't go into deep analysis, but just looking at PPMs from the intermediate value right at the moment, the algos are not projecting. Let me expand this value out so you can see they're projecting just choppy going forward, staying getting into trend mode. You can see that the moving averages are being projected to rise. So the market should stay above this 10-period moving average. And that puts us, if we do that, that puts us probably into that 42 handle. But my point is that there's not a trend mode on intermediate trends right now, but it's possible to develop depending on what type of price action we get. But right now, it's showing that we do have a very slight upward slope forming here on the intermediate, but there's nothing we can go to and say, man, we got weekly trends here, all that stuff. And I just want to make this also clear, as when I'm talking about our database isn't necessarily projecting some robust environment on the indicator, on the indexes. It's telling you, I mean, we've got almost 10,000 symbols long now, or 9,600 symbols. It's about those individual symbols, not about an index. Typically, when you get that many symbols long, the index is going to rise, but the index is highly weighted. And I've been talking about secondary stock opportunities, and those are still going on out there in spite of even the way the Russell has traded terribly, all that stuff. But what we're trying to talk about here today is just the PPMs, the trends, what they're telling us. So what you ultimately do, we could take this and we could have started with a 1 and 5 minute chart intraday and develop the same kind of trends and characteristics, and maybe use the hourly. I pretty much, on a daily analysis I bring up on the channel, I bring up an hourly chart. It's almost every day, folks. The hourly chart will project even a high or low around the London Open, and that thing it's got to be 85% accuracy on those numbers, on that turning point. It's just been phenomenal. And I'm convinced that you could trade the first 2 hours of the U.S. session and trade some of the characteristics that have been happening there for a while, and you could trade an hour before and an hour after London Open, and you should be able to make a really good living just doing that. I've been promoting that for a very, very long time, and that's exactly how it just continues to be incredibly accurate and all that. But so let me do one more. I'm going to turn the market grid off as well for a minute here, because I want you to just see these patterns that are unfolding here without too much noise around it. But you can see it almost looks like maybe a 1 ABC, and the bottom here on March 13th was the bottom of a 2, and maybe we're starting a 1, 2, and then maybe ultimately a 3 here. And this is even evident here on the weekly chart, and it may end up to be an ABCDE kind of pattern. Who knows? Double zigzags. There's all kinds of formations, but it does look to me, based on our dailies, based on when I do analysis, and you folks have this available to you through the channel, is the bullish percent, all of these things stacking up, telling a story. And if you're willing to pay attention to the story, you can participate in it. Going back to October, I remember I was out of town. Of course, I got sick in the month of January, so I was pretty much absent during that time, which was a shame. But the bottom line is, what we've seen so far out of this pattern is heavy resilience to declining on a big way. And I'm shocked that the trend line guys are probably still hanging out here on the weekly talking about trends, but I think the trend line's been broken. I don't know. I don't look at them. But the bottom line is, there is kind of a flat value here around 4,200. You break out above that, then you're going, the next level up here is at 43. Then you got a little top over here at 46. So I think ultimately we probably trade in between here and there, and that satisfies all the trends. What we're going to have as we go through it, just using this analysis on the PPMs that I've been talking about today, is we're going to ultimately see, let's go back to the daily and bring that back into perspective. We're ultimately going to see this little sequence here even evolve and get into an extended wave, or it's going it's going to fail, and we're still locked into a trading range, and we don't get above 42. I think the number around 42.60. I'm not trying to do any real analysis at the moment, but around those levels. But we are going to see, it looks like the PPMs are wanting to flatten off. We'll see if we can hold these values as we go through. And so those are things if you have, the SMA prediction is not available yet. It's probably June, maybe sooner. It's the problem that we have. It's somewhat a pain in the ass to distribute these indicators on TradingView. They didn't make it easy. They didn't make it for people to do invite only. Matter of fact, if you do a couple of things wrong, they'll delete you off of TradingView. I've got a couple of friends that did some stuff. I mean, I don't even interact with anybody on TradingView. It's too dangerous. I mean, there's 30 million people that might see my post on TradingView. I don't do anything there. It's just too dangerous because they will cut off your access. I don't know what happens if this account got blocked and you folks paid me to have these indicators and somehow my channel got blocked or deleted and now you don't have access. It scares the heck out of me. So I don't do anything with them at all. Okay, I see it as very risky just because I have some friends that had their channels, and I don't know what happens if you have invite scripts and I don't know what happens, but I don't want to find out what happens. And as Bank Math just said, they will ban you for nothing. So I'm telling you, I don't talk about I don't do any communication there at all, and we're just very, very careful because we know this to be very, very true. And so I would not put the integrity of that delivery at risk. I'm very extremely careful. So it's unfortunate that TradeStation stopped their app store because that was a venue which I could have distributed everything that we do, including trading models, all that stuff, and I can't do it. The only other option is to build software like this, and trust me, you don't want to compete against TradingView. It costs a lot of money to maintain servers and build this stuff and keep. If you knew what we went through on just data maintenance at end of day, I can't imagine what these guys deal with maintaining every market real time, all the ticks. I mean, wow. I mean, it's impressive. Okay, folks, it's a very big deal. And so I don't want to get into that business. I was just telling this friend of mine I was talking to earlier is that I like TradingView, his ability to distribute these ideas out to you folks. I never wanted it to be like a subscription. I just wanted to get them so you could use them and all that. So I mean, there's so many platforms out there. I can tell you it's it's a treacherous environment if you're a small software person like we are. I mean, we operate for the most part with institutions on our software side. We still have around 15 billion running in there. I haven't really solicited a lot of business there for a lot of years. There's just some core clients that have been around with us for a very long time. We used to have quite a lot of money on the platform, but we dealt with the investment community, and they're pretty finicky and very ideologues from the standpoint of buy and hold. So it's not I'd rather hang out with you guys. For years I was doing advisors, and we still do them. There's people that understand what we're trying to do on WaveTech and Portfolio Expert, and it's very, very useful. Just that most folks aren't going to use it because it's just too difficult for them to implement. It's getting easier, but yeah, anyway, the subject for another time. Let me see what you folks are talking about while I've been talking. Yeah, so Eric, thanks. I just saw your comments here about, yeah, I mean, folks, I day trading, I use the order book, just the level 2 order book. I'm looking at that more than I'm glancing at charts, but focused on the order book, and especially if I'm in scalp mode. That's the way that goes. It's there's some pretty good stuff here. Yeah, so David's talking about me trading on the 1 and 5 order book flow. Yep, that's it. Yep. Yeah, and that's the whole thing. I mean, intraday. That I apologize again for everybody about the live room demise. I closed it down just because it just was taking too much. I don't know. I'm working on something new though, and this has everything to do. And the plan is to have like literally PowerPoint type presentation going forward, not random like what we did today. I just wanted to integrate with some of you folks today and hang out because I think that there's some value in this. Hopefully you're picking up something for hanging out. Nothing else, you guys get to chat. I love the chat, the channel, and the community that's been built. I wish we've been digging into this YouTube situation. There's definitely something going on there with YouTube and me being promoted out there. That's for sure. I don't know how to break that algorithm. I saw a video on how there's a way that competitors can destroy you so you can't get traction. And it's very interesting video. So I don't know if I've been attacked or whatever, but we seem to be stuck. I think we're still 32,900. I think we made it from 800, 900, but you watch, it'll come right back to 800. But anyway, but my approach on intraday is different but similar to what goes on with the what you see on the channel. The hourly chart is very useful if you can figure out this. Let me rewind, and this is with every part of trading. Let's just talk trading for a minute. Every part of trading, all you need to do is figure out 1 or 2 bars in advance what the probabilities are and have a high level probability, and you trade that probability. That's all you're ever going to get. That's why I was talking to somebody the other day, and if somebody asks you, "Hey Bob, what do you think the market's going to be in 2027? Where's the S&P going to be in 2027?" My answer is, who cares? Who cares? You can't trade that. We're not going to put a trade on today for 4 years down the road. No. So I always try to keep my focus on few weeks out, few days out, few weeks. That's all you need is that perspective. This is IMO, in my opinion. This is all you need because that's what you can trade. And if you can figure out, even if you're intraday, you can figure out a 5-minute bar, you figure out the next 10 or 15 minutes in price movement with reasonable amount of accuracy, and you play it properly, you can make a ton of money. So you don't have to figure out, you don't have to be, the people that like to predict these long-term, the Harry Dents, the market's going to fall. Bob Prechter's fallen into that hole many times over the years. There's no money in that other than, I guess, people, like I said, if you want to find out what's not going to happen, go to Zero Hedge, go to their stream, and every one of those stories, I'm sure they've got at least one right at some point. I don't go there at all, but it's doom porn, right? It's like everything, the end of the world's coming. I'm sure they got some great stories on the bricks. And they're very convincing. They're well written by smart people. So don't get me wrong. It's somebody's honest opinion, and that's what it is. But they're almost always wrong. It's sort of like I've talked about. I've worked at the big institutions and banks, and I'm an ex-Merrill Lynch guy, a Merrill Lynch institutional. I've been through in a lot of big trading rooms, hedge funds, trading floors, all that stuff. And, if you want to know who's wrong, it's probably all the Morgan guys, everybody, all those analysts. Ed Yardini is a really smart guy, and he still got a good operation and stuff, and it's fun to read, but he's almost always wrong. He was wrong when back in the 80s when he was our head economist. We would fade him. I mean, he was a great fade. I mean, if Yardini got bullish, you could definitely get on the other side. And so, I mean, not as good let's face it, nobody's as good as Kramer. No one will ever be that good. Okay. Yeah. So let's see what's going on. Yeah. I mean, Harry Dent's pretty funny. Hey, just Trader SLA, just for the record, I will look at your email and I'll answer you direct, and I'll take care of that there. Okay. So I'll definitely do that. I had planned on doing that. There you go. Trader Kramer inverse PPM. I mean, is it amazing how bad that guy really is? Amazing. Yeah, but listen, this stuff is hard. I tell everybody in the old live room, it's like the hardest thing that you'll ever do is discretionary trading, which is looking at these indicators and making a decision to buy or sell. This is a really hard job, hardest job ever. I tell a story in the pandemic when my channel was blowing up in public eye at that time. I mean, we were getting 30 and 40,000 views on video back in those days, but everybody was sitting at home, right? So, but the point is that I had some gambler guys coming in telling me how easy it was to trade the markets, much easier than betting on games. And my comment, I actually talked to this one guy and I said, I think you've got a lot to learn. This is a lot harder than you think it is. And, there was a lot of easy money in 2020, man. That was the easiest money, most amazing opportunity I think I've seen in my lifetime. Even, there's been some good ones, but that was special. That really was. Okay, Keith, thanks. Yeah, I'll do my best. Listen, I got a crazy week. I'm going to be out of town for a week, and I have a whole bunch of stuff to prep for meetings while I'm out of town. It's absolutely crazy. Yeah, as a buddy of mine said, bank math, it's never easy. That was his favorite line. It's never easy. It's not. I shouldn't say that because there are times that just the setups are perfect. And let's we're probably deep enough into this. We got 130 people hanging around. Thanks. I appreciate it. I'm just taking a look at yeah, listen, Vito, you're right. I mean, listen, that has driven me. If you love this stuff, listen, I'll be 71 years old this year, and I have no, I want to be like Icon, right? I want to be in my 90s and still be lucid. He's one of those super thinkers. My buddy Jim Baker is amazing. He's 82 and just, man, I didn't know him only for the last year, but I wish I would have met him like 20 years ago. It would have been awesome. But he's still just amazing at what he does. I retweeted. I mean, he's just on this on the Fed balance sheet and stuff. And Bank Math, by the way, that was a funny tweet you sent me on the monster, the Fed monster formation. I'm just reading some of your comments here, folks, so bear with me. Yeah, listen, I still yeah, listen, I started, I walked down to Chicago Board of Trade in 1979. I was 27 years old. And it was, I had been pursuing a career in real estate. And real estate kind of blew up in 1979. That was when Volcker came in. So I came in with Volcker, end of Jimmy Carter, Ronald Reagan, rates going to 25% effectively. It was crazy there, and it was amazing. I have to tell you, I've been through every crisis, downturn, all this stuff, and this has been, talk about I would say a recession-proof industry if you do the right things. That I've never, felt. Matter of fact, the worse the markets get, the better I've done. So like 08, 09 was like golden to me. That was my business just exploded. I've never seen anything like it while everybody else was getting hammered. Yeah, if Baker's hanging around, yeah, we're still debating. If you're on Baker, it's like we're still debating this brick situation. We got a long ways to go based on our last conversation. Look forward to the next one. Yeah, just very, very blessed, folks, and I appreciate those of you. I still want to do like a live meeting somewhere, and where we do a conference of some sort. I really want to do that. I don't care if 50 of us, 100, 300. I don't care how many people shows up. It would be absolutely amazing. We'll get. It would be really fun to do and put it really structured together, and that would be fun. Bedtime here, so you must be in Europe somewhere. Yeah, so we spent, just looking here, hour and 30. So that's about what I planned for. Listen, I had planned on a little more structured today, but it was kind of cool just going through the stuff we did. There is just a ton of stuff that I want to teach you folks and bring in. I think and everybody, I'm sorry I showed these things here. I've got them on the screen. These SMAs are pretty amazing, mainly because they're tied with the PPMs, the predictive SMA. There's a whole bunch of considerations I'm going on there, because right now they're fixed to the moving average number. I think it would be maybe putting a variable so you can just put it to whatever you want. Everything. You have to understand, the 200 period moving average, by the way, was only added recently in the last 2 years. I never used the 200 before. Didn't give it a lot of credibility, but basically, it's interesting. And just a final comment here on the moving averages, the 10, 21, 40. It's interesting as you go up the scale, if you have 10, 21, 40 day moving averages, okay? If you go to weekly, the 10 week is similar to the 40 day. They're very similar values. If you think about it, the 10 weeks it's got a similar number of days in the calculation equals the 40 the 40 day. So you're looking so it's like 50 versus 40, but it's calculated different. They end up be a little different. I don't do the typical 200, 150. I mean, that's just random. We did a lot of research on these moving average relative to Elliott wave. The second article that I keep teasing you folks with on Substack actually goes into a fair amount of WaveTech detail. The issue with that article are putting all the graphics that support. I've got most of the graphics together, the graphics that support the text that's explaining what's going on. You need the picture too. So most people don't give, you cannot believe how much time you can use, excuse me, that you can burn on developing the illustrations. The words are easy. It's finding the right charts, the right things that meet all that, and just searching that out is taking a lot of hours. Yeah, just looking at Nicolo. Yeah, they're going to be out there. We got some other stuff that we've got. Still, there's final things going on with STX buy signal. Somebody asked about that, so I don't know if they're still around. But the STX buys are better than the RTX sells, but sometimes our RTX sells are deadly. There was one RTX sell on Tesla recently on, I believe, a daily. Let's just take it. Let me turn that on real quick. See if I can get this up here. I thought there was one. Just trying to get this blown up so we can say, yeah, there it is. Right here on the 31st, we got an RTX sell signal on Tesla. And 1, 2, 3, 4 days down, reversal. PPMs are still negative, down 0.37. Looks like PPM 2 is flat. So we traded below all the averages here. So that was interesting, but Tesla seems to do really good with the RTX sells. There was one on a weekly basis going back, and I don't know, it might have been 20 or 21 that was absolutely deadly. And let's bring up that. Yeah, this was it way back when. It was this was at 22 right here on November 21, and it started this decline. That was one of the classic. Seems like there was another one here somewhere. Yeah, here it is. Back in January of 21. Nice little moves off here where we got not just sideways, but ended up to be pretty much the top of the sequence. I think we printed a new high at one point, but the numbers were pretty substantial actually from that standpoint. But anyway, yeah. Now I haven't done Apple. I'm going to do it for you, Dr. Baker. Only for you. I will do Apple. Yeah, Apple is finally starting to stall out, but let me go off screen for a second here so you can see everything. But the scenario here is there's lots of support, 1 156 handle. I know we're 164. That would probably feel good. But the PPMs are very close. This is a weekly analysis. I'll go to daily. Very close to potentially rolling over. And all this rollover is going to do is we should test that moving average here. We should probably stay above where that average is, 154.90. Let's go to daily real quick. So daily, you can still see we have this upward slope. There's still some potential daily through this week. It's just climbing. This pattern is just looking here real quick. Yeah, we got PPM 2, 0.25, 0.35, PPM 1, PPM 3, 0.20. This angle is pretty good, and for me to be right on the indexes and continuation, there's probably not a lot of downside on this thing. From here, it's probably going to hover along this simple 10. Matter of fact, we're 162.44 was the 10 period moving average. We reversed 162 even. That's where it bounced right off of that number. That's going to continue to be probably a positive number here. And that's one of the things that folks that I want to develop here on, like these predictive values. I'd like to have, and I'd actually like to know exactly what the value is. Right now, it's just a line on a page. You kind of have to estimate what it is. Looks like it's 162.73. If we go to the next day, it's yeah, you can't really get the value here. Very good. Maybe, yeah, 62, then 63, about $1, going up about $1 a day roughly, and it looks like it's going to maintain that for a few days. So that 10 period moving average is going to be it. If it gets down, it did break down and get to through that level, then you probably you'd have pretty major support down at 158. Let me get the right number. Yeah, 158.27, but that number is rising as well, about 50 cents per day. So by the time we go 4 or 5 days out, you're $2.50 higher than that level, which would put you at 62 or so. But it puts you right into pretty close to where the values are right now. So there's not a lot of downside. That's an interesting statistic there, Carissa. That's very interesting. Is if you look at this post she just put up, you got between Apple and Microsoft, you got a 4.69 trillion market value. The Russell 2000 is 2.69 trillion. So yeah, basically it's Microsoft, right? So yeah, these are crazy numbers. And just a final comment here, folks. I'm just going to come up. We're going to wind it down. I do want to say something that that's something that is hard to comprehend when these companies get as big. Guys like Baker and I have been around forever, and we've watched this whole thing unfold. I remember in 1979, if you did 40 million shares on a day, it was a monster day because they had all these little pieces of paper they had to match up. You couldn't do much more than that. I don't remember if they even did 50 million. I'm talking about million shares. I mean, it's nothing, right? That's like one stock trade, plenty of stocks trade that much. So what's happened is the market valuations, and the same thing with the banking system, is all of this stuff is giant. We didn't, and everybody's comparing the numbers there's been more money. lost in SBV and Signature, blah, blah, blah. Then they're all of 2008. So what? There weren't trillion-dollar banks in 2008, you know. Now we have multiples, and the whole banking system has grown so large. And this is the argument. I know that Jim and I talked about this, is that there was some guy going, well, there used to be, I don't know, 50,000 banks in 1929, and now we're down to 40 4,000, between 4,500, whatever the number is. And so somehow that means it's negative in the bank. No, it's just that you don't need as many banks. Jim and I talked about this back in the old days, in the 70s and 80s. Every doctor in every small town wanted to be a banker. And you look at the board of directors of these little small town banks. I grew up in a small town in Indiana. There were 3 banks in my little town, and the population was 20,000. There were 3 private banks, and they were all started and primarily owned by doctors. So there was banks everywhere back in the day. And so anyway, my point here is that everything has grown very so large that the dynamics are much different. The number of traders, the number of people participating. Like I said, Tradingview, has 30 million customers. I mean, that's insane. That's a lot of one platform. That's a lot of customers for a charting system, and you can trade from it. You can hook up your account, do all that. But my point is that everything's really big, and you can't, and I get what Bank Math put up there is true. And yeah, so I mean, the whole Russell index, that's maybe why it's called small cap, and the mega, these big stocks. I mean, there's a bunch of $1 trillion stocks. Whoever thought that would happen? I can tell you, the only conversation I recall is one of my mentors that I met in 1980. Frank used to always say, he goes, remember, this probably goes in, I think it was probably even right before or shortly after the 87 crash, where we saw 500 down days. But he goes, one day, he goes, $100 up or 100 down on the Dow Jones would just be nothing. It won't even be anything to consider. We used to do a lot of hiking on mountains back in those days, Yosemite, all kinds of stuff. And we had some local mountains we hiked every weekend. We'd have these deep conversations about this stuff, sitting up on a rock, drinking orange juice, a box of orange juice, recovering from a big climb. And we would have these conversations, but that's exactly where we are. I mean, 100 point. It's funny when you see CNBC alerts or badge alerts on some financial deal. Dow Jones up 100, down up 200, down 200. That's a joke, right? It's nothing anymore. And that's exactly where we've gotten to. Yeah, that's I like that, David. That probably was a distraction. So here's closing, folks. I mean, this was really a random, just kind of hangout session. I'm, 130 of us hanging out, so appreciate it. The plan is this going forward, and this will probably start to be implemented in May. There's going to be some bundling of things that I do to make it much more affordable and approachable by everyone. There's going to be mastermind classes where we're going to do 1 hour mastermind, 30 minutes of Q&A. And that's a really good idea that I've just put out there. And that would be a good way to go for sure. And so we're going to do that for each product, WaveTech, for the indicators, and for Portfolio Expert. And so there'll be 3 hours. So I used to do 3 hours times 3 every week in the live room. So we're going to do 3 hours a month on that. That's going to be included in this bundling so that I can do some education. And it will be organized. It won't be random like what we did today. There will be, here's each session will have a point, like maybe understanding the platforms on the software, on the indicators, and we'll pick one indicator. There'll be a presentation, then for an hour and a Q&A on that. So that's the plan. Yeah, so I'm just just taking a look at some of your comments. I think that's probably about it, folks. What we get here, hour and 50, better part of 2 hours. I know there was some clunkiness, but anyway, just great hanging out. Seriously, I've got very busy the rest of my weekend and should be. Yeah, thanks, Trader. That's all. I will answer you, and we'll figure out. Like I said, I did see your comments. Yeah, David, I appreciate it. Listen, there's a lot of good stuff between this left ear and right ear that I need to get out before my days are done, and I got to listen to. I have to listen to Baker because he's telling me I got to write the book. That's what stays on a shelf for a long time. So that's I do have about 38,000 words that are in the book. Anyway, yeah, we'll that's what I got to do. He's absolutely right. Yeah. So anyway, I think that's going to be it, folks. We'll call it quits, and great hanging out. I see at least a portion of a bottle of wine later today in my future, and maybe some relaxation tonight. And then I will see you folks on Sunday night at 9 p.m. Eastern time. Looking forward to it. We'll dig into this stuff. Yeah, somebody's asking if there's sound here. Yeah, there should be. Anyway, all right, folks. Thanks a lot for coming. Appreciate it. I'm going to do my typical sign off, and then we'll see you tomorrow night, 9 p.m. Eastern. See you then. Yeah, David Hands is telling you right there about the time zone. 1-5 hourly intraday. Happy Easter, everyone. Week off is the week of the 17th, week after next.